Welcome to Whiteboard Wednesday, Real Talk with a Realtor. I'm Sharice Wynn, also known as the Agent Lady. And today, guys, we have Ian Stockman from Cross Country Mortgage. And we're going to talk about a really, really interesting conversation. You ready, Ian?
Yeah.
All right. We're going to talk about student loans. Can they stop you from buying a house?
Yes and no.
Okay, so there's some limitations.
Yes, there are definitely some limitations with that.
So this is the first one, I'm assuming?
Yeah, so deferment and forbearance is one of the bigger ones.
Okay.
So what happens is that you can defer or put them in forbearance, any student loan that you may have. If you're in school or having some financial hardship, you can push those loan amounts back. However, us lenders, we still want to make sure that you are we're accounting for that actual payment that you will intend to make in sometime in the future, or that you currently are making.
Okay. So in the deferment forbearance, I know there's different type of programs. So there's the FHA, the conventional. How does that play a part in what you're able to do?
That's a great question.
Yeah.
So there are conventional loans and there are FHA loans. To try not to confuse everyone, with the conventional, there are actually two entities that kind of control the conventional loans. And obviously FHA is just FHA. All three of them look at deferments and forbearances differently. So with the conventional ones, I kind of blanket them together, but they will say, let me rephrase that.
Okay.
There's Fannie Mae and Freddie Mac, and those are the two entities within the conventional loans. And so Fannie Mae will say, no matter what, we want 1% of the outstanding balance if you're deferring it. For Freddie Mac, they will go 0.5% of the outstanding balance. And FHA, they also will look at 1% of the entire outstanding balance if it's deferred or in forbearance.
Okay. And then with conventional, it sounds like, or with either one, are there any other options outside of just what's on paper? This is 1% or 0.5% or whatever of the outstanding balance. Are there some options?
Yes. So as far as options are concerned, I take that as flexibility.
Okay.
And the flexibility is going to be more with the conventional side of it. And here's what I mean. So if you came to a lender like myself and you had student loan debt, we would basically look at it and see how high that payment is going to be. If the payment is probably going to get in the way of you actually purchasing the house that you want, we would tell you to try to restructure that. And that's where the flexibility comes in with conventional loans other than FHA. FHA states no matter what the actual payment is going to be, we want to see 1%, either the greater or of 1% of the actual balance or the actual payment.
Okay.
With conventional though, they only want to see whatever payment pops up on a credit report. That's pretty much it.
Okay. So either way, they're taking into account whether you're making a payment or not, and where does it fall between the percentage or the greater of?
Yes.
Am I saying that correctly?
Yeah, so think of it this way. A lender just want to make sure that you have the ability to repay back the loan.
Okay.
We don't want to give out mortgages to people that can't pay them back.
That makes sense.
So we just obviously want to make sure that we're accounting for a debt that will either be paid in the future or if they're paying right now. So we do want to account for that.
Okay, so more flexibility with the conventional loans.
Yes. Because
you can restructure, get an income-based payment,
yes,
which is lower,
yes,
which then would potentially increase your purchasing power.
Absolutely.
Which then brings us into this higher payment amount.
Yes. So
okay.
Higher payment amounts, that's obviously going to have a big determining factor on how much house you can buy. And that's why I was saying there's a lot more flexibility with the conventional loan, because you can actually restructure it and actually make it a little bit lower to obviously afford more of a house that you want or would like to.
Right. But unfortunately, I guess sometimes people are put into a situation, which we could probably talk about another Whiteboard Wednesday. But at the end of the day, talk to a lender to figure out like which category you fall in and which is going to be the better option for you, so you can purchase the house. And more importantly, the house that you want, but also that you can afford. So I think that pretty much sums it up. Yeah. If you have any other questions, how do we find you, Ian?
You can go to my website at www.stockmanteam.com. You can email me at ian@stockmanteam.com or just Google Ian Stockman. There's not too many Ian Stockmans in the world, I can promise you that.
All right, cool. Thank you so much.
Thank you.
Absolutely. And remember, guys, friends don't let friends of friends buy or sell real estate without the agent lady. Make it a great day.